Guys, this is what you can quickly use. This is what you can quickly use to trade any market. It's a smart money concept to trade any market. Yeah. Let's go. See this? The first point is that you have to identify the market direction now bias on higher time frame. You identify the market bias. How do you identify the market direction bias? Is to mark out the price range, whether the market is in bearish or bullish structure. You mark out the range high and low of the market. For example, we are going to use British pounds US dollar currently that is running on this concept of bearish structure. So we mark out the range high and the low. Mark out the range high and the low. So that you now look out for when price will pull back inside. Make sure that the range low must have a liquidity inducement or a kind of must sit upon a higher time frame or a potential support. Must sit upon support. It's going to be buying. It must sit upon your range high. It must sit upon the key resistance level or previous other blocks in the past. I'm going to show you that. Now, if you come here, you use your use your whatever, customize this your gun box, so you discover the range high, mark it from you mark the range from the high to the low. That is intermediate. I'm using you use daily time frame. Yeah. You use daily time frame because of noises. Yeah. So now you use your gun box, which is to identify the premium and the discount level of the price. Because the institution usually buy above, usually sell above the 50% the midpoint and buy below the midpoint. Yeah, so that's what I put here. Anything above 50% will be sell zone. It could be 0.62, it could be 0.78, 0.89, or 0.70.5 degree. Do anything below the midpoint, if the market is moving higher, anything below the midpoint will be what? Will be a buy zone. Yeah. So that's the discount and the premium. Now, if, for example, you discover the range and you see that the price has moved back into above within the range, inside the range, so you go to sell. But before you sell, you got to look out for these points, all the major confluences. Yeah, they give you a lot of boost to your distance. You look out for protected zones within the range. Look out for imbalances, which is the fair value gaps or liquidity void. You look out for inducement, which is the equal high or equal low, swing high, low, then trend line liquidity. That trend line could be also termed as the flags, it could be termed as compression. Yeah, as prices try to compress back inside. So that shows a kind of a weakening momentum on the buying side. So I'm going to look a sharp here. I'm going to be sharp downward. So now the filter you can use there to add to it that will boost more signal is that. So I've told you that this place must sit upon what? It must sit upon the. It must sit upon the distance. Now this place must be on the higher time frame potential POI. Now you got to use you can use your Fibonacci level to mark out the area you go. Yeah, especially when the imbalances, where your imbalances or equal highs, low falls upon these zones, these levels, it becomes a very strong resistance point or zone to trade. Yeah, so that gives you a very, very powerful signal. Then you're going to look out for chart patterns. For example, if you get your 3 drives, you can get your above this place, you can get your 3 drive above 0.5 above midpoint, or you get your head and shoulder pattern above midpoint, Then other pattern you can talk about. You can talk about the rising, the wedges, the triangles, or then those patterns you can think of. Then another point you can use there, you can use your London and New York opening session. Very, very powerful. Very, very powerful. Then you are going to do this. If you go to discover the London and you're going to use your 15-minute chart here. Once the price gets here, you go back to your, once price rise above on daily charts, once you get a price, an induction or retracement into the range above 50% of the range, then you got to look out for your what? You got to look out for your London. This place, you're going to look out for the weekly intraday sections open. Yeah, so this is London and New York. New York is powerful. It's powerful. It has been consistent on 15-minute chart. Then you can scroll down to 5 minutes or 1 minute to reduce your distance to maintain a good risk reward ratio. Then you got to look out for AMD induction. Monday and Tuesday usually be an induction. This place will usually be Monday on Tuesday. Then Wednesday going to be a reversal of it. Yeah, Wednesday, Thursday, Friday. So those are the points you can then end of the month. You can see if you can get this in here. You see here, this is end of the month. This is end of the month reversal. This is 1st of June down. This is from May upward. We have induction. Induction, that is retracement into this range, right? This is pound USD daily chart. We discover our range high from here. This is range high from here to this place. We discover this and there. Then this is the midpoint, and price has moved back inside. You can see the first move here into this the first imbalance that we identify here, the first imbalance, and it comes in contact in conjunction with the Fibonacci levels of let's put it there. Not 50. Oh, this is not above this yet. Yeah, you can't trade up this first one because it's not yet above 50, except you're going to use your lower time frame to get another, maybe like a mini range within this within this higher level range. Then here we have a good entry point here because it comes in conjunction with imbalance. Consider the reversal inside comes in conjunction with imbalance. Then we have our, let me do this. So we call this place off. Let's call this place off. Then we have a, so this is the impulse. We have this is impulse. This is impulse. The bearish impulse. So this is our impulse. You can see the big drop, the significant move downward, not in range. This is an impulse. Yeah, it's a significant move out of this range. Then we will have our induction or correction back inside the range. Correction or retracement back inside the range, which happens at the above 50, above the midpoint, right? Above the midpoint, and we have our imbalance here of fair value that being retested here. Then we're going to see the next move. So here you must have gone to your lower time frame, 1 minute or 5 minutes or 15 minutes, because you are using your daily as your bias now, as your set of bias. So that means all this place is going to is coming to be retested, yeah, in the future. Yeah, it's going to be retested. Yeah. So you just mark it down, mark this play down. It comes at confidence with the 78, comes out confidence with 70.5. Then as you get this further push downward, you got to arrange for your new stuff. So if you put up your put up your sell there, you got your sell there, then almost about there. You go to target the low of that, the low of the impulse. This is the range low as your worth, as your this thing. You can take it, you kind of measure this impulse them downward. But for me, the first targets could be here. That's around the 512 pips. Then you can see this moves down. You see it almost came back there. We got almost about there, almost about there, almost about 734 pips. Yeah. So, and you can see right now we have a new range. We have a new range, we identify a new range. Yeah, we identify a new range here. So that means this space is going to be impulse. Let me take this out. So we identify a new range here. It's really going to be impulse. Then this is retracement back into the zone. Because the new month, the reversal is the setup, right? So this is you can see this imbalance. You have a BMS. Your imbalance must come with a BMS. Yeah, you check back, you see major this in there. Yeah, you see, yeah. That's why that place is so good here. Yeah, see it here. It's imbalance. It comes with the BMS. Yeah. So that's why we are likely going to get a push to this area. Yeah, in the future, we're going to get a push to that area. So that is inducement there. Then you get your this thing, get your new range. Get your new range. Get the new range. So this is what pounds USD is likely doing right now. Yeah, we have our this here. Yeah, we already got this above. We can imagine we got almost about there. How many pips here down? Because there was a retracement above 50, above the midpoint. You can see it. This is a retracement of almost about got almost about 188 pips there. We have got 188 pips there selling down above this midpoint. Then at exactly what we have our DC here imbalance at 62%. Is above this, and then you just hit it and it's still going to come down. So we're going to come down. That is bias for the week. We're going to see more sales for the week. Probably grow be here, then grow something like this, something like this. So you may target this place as your first take profit. So your stop loss depends on you. I'm not the one to choose that for you. Your stop loss depends on you, depending on your capital and your risk level. You can use the above 78 or 100%. Just take that. That's the 368 target for that. And likely going to see a push higher here. But the growth be once we get a bust outside this range low. Sorry. We're going to get this is range low. And this is range high. This range low. So we're going to get somewhere bust outside this range to give us that will give us a good this upward, like to this imbalance. Yeah. So God bless you. Just trade with fashion.